Paul, the trade deal with Europe doesn't have any details, but the market doesn't care. It's just looking at maybe more certainty. And if you look at the positives and the negatives, therefore, actually, this morning there are more positives.
Yeah, morning, guys. Some deal is better than no deal is the market's perspective. And each time we're getting one of these agreements with the US, the relative or the markets in those countries have been taking off. You know, we saw it with Japan last week. We're seeing it with Europe this morning. And the US markets have been cashing in as well, rising ever higher. And it seems that, as you said, a little bit more certainty and a little bit of a sense that at least at the end of this week, we're not going to see tariffs jacked up again is enough for equities to be taking it as an overall positive, even when you have those longer term risks of a big drag on economic growth that we're going to see as the tariffs pass through the system. Currency markets is interesting, a little bit more nuanced. At the start of the day, it looked like the market was trading as a positive for the euro. At the moment, we flip back the other way, and it's the dollar that's the top of the pile. So FX doesn't really know what to do with it, but for the stock market, at least it's being taken as good news and relief.
Paul, with the, I guess, growing clarity we're getting on Trump's tariff agenda, his economic agenda really seems nearly set. You know, that the tax bill was passed a few months ago, signed into law. Does that warrant the VIX being where it is, sub 15, lowest since February? What's your handle on how implied volatility is so low in this market?
Yeah, it certainly seems like the market could be accused of being complacent, particularly with so much event risk that we've got coming up this week. You know, not only have we got the trade agreements, the trade talks with China, we've also got earnings coming through thick and fast. We've got central bank meetings galore, BOJ and Fed top of the list there. So lots of reasons that you might expect the markets to be worried and a little bit cautious. None of it. We have that very low implied volatility reading. But behind the scenes, analysts are starting to feel a little bit more cautious about it. So, for example, there's lots of recommendations of people putting on hedges in the options space to protect against a drawdown after this big rally in stocks. And also in the bond space, people are coming shorter maturity, not holding on to long duration. So there are signs that people are scaling back those risks just a little bit and getting a bit more cautious, even if the market is still gung-ho and optimistic on the surface.
Paul, 30 seconds. I'm going to put you on the spot here. We are now looking ahead to Stockholm, this conversation between the United States and China in terms of these negotiations. What is a win for China here?
I think just a continuation of the talks is good enough for China. As we said with everything else, Kriti, as long as there's not a sign of escalation again and tariffs getting jacked up, then people seem to be happy. In China, 5 analyst reports we had over the weekend were all talking about a bull market, so there's a lot of optimism there over those equities at the moment. The market is riding a little bit of a crest of a wave and getting very excited about it.